In this video, we're going to talk about stewardship investing for regenerative prosperity. And we're going to start by showing you the unique capabilities and responsibilities of stewardship investors. These include investing large pools of capital and investing in perpetuity. These investors are not small investors and they are not time-limited investors. They invest for the purpose of generating fiduciary returns that equal or exceed their fiduciary obligations, and those are to fulfill the purposes of a governing charter of trust. The trust will run for successive generations of chartered beneficiaries. The different trust governing charters we're talking about will include pension plans, educational endowments, charitable foundations, and the like. Now, the current default setting for stewardship investing has stewardship investors transforming their entrusted funds into financial assets, becoming asset owners. They're doing this by hiring asset managers to buy and sell their financial assets. These can be listed securities, or they can be trading other hedge fund-like alternatives, but always taking profits from other investors. Now, every investment has impact, and the impacts of investing in the asset ownership model are going to include impacts on the financial health of the investor itself, and also physical impacts on others. On the financial side, we are seeing an inversion of incentives where asset managers are doing quite well while asset owners, stewardship investors, are struggling. There is far too much opportunity for miscreant market manipulation. Think the recent fiscal crisis of 2008. We are seeing erratic returns in stewardship portfolios that are inadequate to the obligations of those portfolios, and sometimes even impairing corpus, which is representing a threat to their longevity and makes this entire system not sustainable. On the physical side, we're seeing this participation in asset trading as perpetuating a recurring and even accelerating cycle of boom and bust, again, fiscal crisis of 2008, and also this really structurally ignores pretty much all the non-financial impacts of investment decisions by stewardship investors. And for this reason, this System 1, what we call System 1, which is our present system, we think is actually quite weak from both a stewardship investing standpoint and from a regenerative prosperity standpoint. And so what we want to do is flash out of this present weakness into a new System 2, which gives us a future of strength. And that we do by flashing out of the current system of asset ownership, so that instead we have stewardship investors agreeing with values-driven business leaders on the equity splits in a negotiated base case cash flow waterfall. In this way, they deploy their entrusted funds directly into wealth creation, and they're earning their returns in increments over time as wealth is created also in increments over time. And so we are seeing a very different impact profile. On the financial side, we are seeing costs that match benefits, that provides transparency and constancy, the ability to make their paid out of benefits and to preserve the corpus so that they have durability over time, and this whole system too is much more sustainable. On the physical side, there is much more ability to control the impacts of your investment on a lot of different physical characteristics, including economic adaptability, financial authenticity, earnings integrity, the global community, resource resiliency, and climate stability. So this is what we see is the new System 2 for our future of strength for stewardship investing and regenerative prosperity.